It's a new month here at Henssler Financial, and we found 3 important things to focus on in the market this month. Number 1, earnings season. With the second quarter now in the rearview mirror, it's time for earnings season to heat up. While likely to be an ugly second quarter from an earnings perspective, it should provide some indication just how severe the effects of the coronavirus pandemic have been on corporate bottom lines. Refinitiv estimates that Q2 2020 earnings will decrease by 43.1% from a year ago. Now, if you strip out the energy sector, which has been pummeled by falling oil prices, growth estimates move up to a decline of 37.8% for the quarter. Top line, or revenue estimates, aren't so rosy either, with revenues expected to fall 11.7% from Q2 2019. None of the 11 sectors that comprise the S&P 500 are expected to report growth in earnings from a year ago, but the utilities and information technology sectors are expected to post the smallest declines in earnings at 2.5% and 8% respectively. These significant declines in earnings make it hard to justify current market valuation multiples. However, many seem to believe that the worst is behind us and corporations will beat the now lowered earnings expectations that have been set. Number 2, jobs. That's right, jobs again. The April jobs report marked the largest single month of job losses on record, with some 20.5 million jobs lost, sending the unemployment rate to 14.7%. Since then, we've witnessed back-to-back months of gains. That's right, gains. 4.8 million jobs were added back to the economy in June, following an upwardly revised 2.7 million additional jobs in May. The question now becomes, will this trend continue? We'll have weekly jobless claims to watch for an indication of continued improvement. The jobs data is reflective of a partial resumption of economic activity in our country, but a recent rise in COVID cases could slow the recovery, so watching weekly claims will be crucial. Number 3, continued reopening of the country. Last but certainly not least, we'll continue to watch the reopening of the country. Or the opposite. While the majority of states have reopened to their new normal operations, some states are now reversing those openings and are again implementing more restrictive policies on businesses as COVID cases continue to rise. On July 7th, more than 60,000 cases were reported nationwide as virus rates continue to surge in the South and in the West. As cases continue to spike, whether there is a true reversal of policies or not, fear will likely lead many consumers to adjust their spending habits and avoid many activities they otherwise plan to do, such as going out to eat or shopping. Retail and dining were bouncing back from the lows, but data suggests over the last 2 weeks, improvement has been slowing considerably, with traffic in hotspot states such as Florida and Texas once again experiencing traffic declines. Reopening to our full capacity is key to return our economy to growth. Should these restrictive policies continue, there are certain to be negative economic effects to come. And that's been your Market Minute for the month of July. Thanks for listening.